So what have markets done? I think we all know they have not been very good. But something, I don't want to show you too many charts, but obviously down is bad and up is good. And there's been just a lot of week after week. So usually you don't see this in a weekly graph. So week after week of bad news. And that's what's been going on this year. That's why we are where we are. That's why the outlook for recessions is as bad as it is. That's why markets are down roughly 20%. But it wasn't just one bad thing that happened, right? So inflation is probably the statistic, the thing that people talk about the most in terms of why things are bad. I looked at inflation and saw inflation was 6% or it's 9%, depending on how you count. And then you think, you go to the grocery store, you go wherever you go, and things are so expensive. Sandwiches in downtown Boston, you wouldn't believe how expensive the sandwiches in downtown Boston. And there's a back and forth there, because I hate a bad deal, but you gotta eat, and inflation hurts, and it's very pervasive. And so what I wanted to remind you is a couple things. One is it's a global phenomenon, and it's not just in the US. So some people think this is a political thing, we made mistakes, maybe we did, but it's everywhere. And so it's not just the things that the US has chosen to do on its own. It's very much a global phenomenon. The other thing is that there's the inflation that we've seen. Some people, inflation is really driving what the Fed is doing, right? The reason why most serious economists think we might be heading towards a recession is because we're doing it to ourselves, right? The economy, prices are moving so fast, employment is so high, companies can't find people to fill all the jobs. There's too much demand. So if you raise interest rates, slow down the economy, then that will reduce some of these stressors on the economy, and that will lower inflation, right? So that's the whole idea of why the Fed is doing what it's doing, is to deliberately slow down the economy. The question that we all have is that, are they going to go too far, and are they going to overshoot, right? Some people have said the Fed was too slow. The Fed was saying, oh, it's transitory. Does everybody heard the word transitory? It doesn't matter. It's just a little blip, and then we don't have to worry about it. Well, that's obviously not what's happened, and that's with people say the Fed was too slow. But so as far as inflation goes, there's, again, one hand and the other. So the things that are positive are the rate hikes are just happening, right? Another big one happened today. 75 basis points is historically as high as it's ever been, and we had 2 75 basis point hikes in a row. So that's a lot. That's maybe it took too long, but it's extremely aggressive action on the Fed. Supply chains are easing, right? We all remember how hard it was to get anything. If you, God forbid, you tried to furnish a new house or something like that, or fix up anything, you'd say, okay, well, it'll be 6 months before you get your new dishwasher. Well, fortunately, lucky for me, our refrigerator just broke last week, and we were able to get a nice new refrigerator in only 1 week, and I was very nervous and like, oh, okay. Well, here's a nice tangible example of supply chains aren't that bad. Sure, we lost all our food in a week, but now we have a new refrigerator. And so you also hear about commodity prices. Commodities are sometimes when you learn like very basics of investing, commodities are seen as the most risky of all securities. They were one of the things that I was introduced to by that great Eddie Murphy movie, Trading Places, where there were orange juice futures, and that was like, boy, did those go up and down. And that was, so commodities, the good thing about them is that they can move fast. So those are the things that when you have situations like natural gas in Europe, people need to heat their homes, and when the major supplier turns off the pipe, then that can go very high. but it can go back down just as quickly. So commodity prices are not quite so bad. And you actually hear that stores like Walmart and Target are actually complaining that they have too much inventory, so that's why it's so easy for me to get a refrigerator. So these supply chain bottlenecks eventually will work themselves out. That's the great thing about a free market economy, is sooner or later people move in, they take up the slack, they fill the gaps, and they fix. The economies are sort of self-fixing over time. So why it may not be is if you look at housing costs are going crazy. They're lagged, and so the Fed isn't fully taking that into account. So these numbers have some positive momentum with them from things like housing costs, right? Like, because it's leases keep getting renewed. They haven't been renewed yet, so a lot of people have lower housing costs than they know that they're going to have in the future. And so, and the dollar is really strong. There's some math people here who are talking about numbers, and real mathematicians like things like prime numbers. They don't like numbers like 10. 10 may be a nice round number to most people, but once I turned like 20 and I'm like, ooh, hey, we turned 20, my friend said, oh, you're so base 10 centric. No one cares about those sort of things. But as far as the dollar goes, right? Some people have talked about the dollar being at parity with the euro. It doesn't mean anything that a dollar is equal to $1 equals 1 euro, but it does mean a lot that the dollar has fallen 10% or 12%. That the euro has fallen 12% or something like that in a very short time. Right? Think about it. What it means. It means like the whole value of everybody's assets on our continent is worth 12% less in just 6 months. That's a really major move for something like that, right? These things should be relatively stable relationships. And so that the dollar has gotten so strong compared to everything else is really masking how bad the inflation problem is, because if we're buying anything from foreign countries, then the dollar it can't keep rising at the rate it was. It could revert, and that would mean that